Hello, good day everyone, and welcome back to my channel. Today we'll be looking at gold. We'll make analysis on gold, Xauusd. Let's look at what we should be expecting from next week. We're just going to remove all these drawings so we could have a plain chart to make our analysis from. Yesterday I made some analysis about gold, and really it has been playing out. So let's look at what we should be expecting coming this new week. Always our analysis is going to start from the 3 months time frame. Let's look at what is happening there. From a 3 months time frame, can clearly see that the market has been bullish. Gold has been bullish since January 2025. Since on the 1st of January 2025, it has been bullish. Even before then, it has been bullish as well. We just have some pullbacks here and there, but the market generally has been bullish. That being said, let's now go to a lower time frame. But before we go to that lower time frame, which is the next time frame, the 1 hour, 1 month time frame, let's just mark the internal range of this present candle, or let's just put it just at this open close level. Though we cannot call it an open close level now, because the market has not really closed. We still have 2 months and 15 days left for this candle to close. But for now, let's just put this candle, let's just put this line here. And again, if you look at something, you will notice that this previous 3 months candle, when it got to this level, it rejected from this level. This rejection tells you that there are some selling pressure around this area that has made this market to reverse. To reject, I mean. Some selling pressure is present in this area that has made this market to reject from that level. Now we have a new candle that is forming. So logically, we should understand that since that selling pressure is still there, so this candle cannot just go through it like that without no opposition. So for that reason, we now believe that that selling pressure that has been here would still make this candle to reject from this level here. Haven't known this, we cannot go to our 1 month time frame. Go to our 1 month time frame. Let's look at what the market is giving to us from there. This was the level I marked from the 3 months time frame. As you can see, the market got to this level, rejected. It got to this level again, rejected. So the market has not really closed above this level. So that means this and this has been acting as liquidity, external range liquidity for the market to take. So for me, I'm seeing that this bullishness we are seeing here was to just come to sweep all this liquidity, this external range liquidity. Let me just remove this so you can have a clear picture of what I'm saying. So this movement now is just to take the external range liquidity. And again, understand that once the external range liquidity has been taken, we should be targeting the internal range liquidity. And the internal range liquidity of this present candle now is going to be the low of the candle. So if this market would sell, we should be targeting at least the low of this present month candle, January 2026 candle. That's what we should be targeting. And outside that, possibly we might be having a fair value gap here that the market would want to fill. Remember, market always fills fair value gap or attacks liquidity. So we are in a 1 month time frame. We can now go to the 1 week time frame to have a clearer picture of what we should be looking at. Now going to the 1 week time frame, we'll notice something here that the market ranged for like 3 weeks. We had a bullish candle, the market bought, sold almost the same, then bought again. So this happened to be a range, as you can see. But finally, the market has broken out from the range. And it has broken to the bullish side. So after each break from a range, the market tends to reverse, or sorry, tends to retrace to retest that area. Sorry about that. So if we have here as a range, let's say the market has been ranging like this. Once the market finally breaks above, there's high chances the market will have to come back again, retest the area before it continues. So you can either do two things. After the breakout from the range, you can either do two things. So it can break out, come back, try to go back again, but now phase. So when we see this happen, as soon as the market breaks below this low, we should be expecting that the market is going lower. So these are the two scenarios, the two possibilities after a range has been broken out from. So in this case, we'll be seeing it as a fake out. So it means that it deceived a lot of traders to buy the market while it's about to sell. But in this case, we can see a continuation after the breakout. It just came, retest, and it goes in a former direction. I haven't understood this. We can replicate that picture I just drew here. We can do it. You can see that here. So we have the range. The market now has broken out from this range, bullish. So two things can happen here. It's either the market comes back to this level, retest it, then continue. That is the first scenario. Or it comes back into the level, try to continue, but we fail. So once it breaks below this low, on a retest of the low, we'll continue selling. So these are the two scenarios we're going to have. First scenario, come back to retest and break above. Second scenario, come back to retest, fail to break above, break below, and we'll continue selling. But again, remember that the higher time frame, which is the 3 months time frame, and the 1 month time frame, is bullish. This one has confirmed that the market is very bullish, but that doesn't mean that we're not going to have some retracements. So this retracement is what we should be looking at now, because after each break, like I said, after each break from a range, the market tends to retrace, to retest the range before it goes to the direction, the intended direction. Plus again, we have a structure here. If you notice, you see that there's this level here that acted as a resistance before in the past. This level had acted as a resistance in the past. If you look at it, you see that we had a higher high, a higher low, and the market tried to break from here. You can see it rejected, which is this level was a strong resistance. That was why the market rejected from there. Then finally the market broke. But since the market broke, it hasn't come back to test this line again. Because this line now is going to be our next support if this market is coming down. Because on this leg, on this leg, we'll be having two supports. Okay, one will be around this area, which is this maybe this demand zone for those using supply and demand. This demand zone. But before we're going to see this one, we must see this one. So this is going to be the most recent demand zone that the market, support zone that the market may likely want to buy from again. So this is what we call the RBX, because it was a resistance before, now broken, will be turning now towards support for the market to keep buying. So for the analysis, there's high tendency that this market would push down to this level first before the main buyer will continue. But that can only happen when we've broken back into this range and failed to create a new higher high. So once we see a failure to create a new high here in this range, then we should know that we are coming to target this level here of supports. And again, if you see that this level will be acting as liquidity to this area. So we have one liquidity here very close to the area. So these are some confluences. These are the confluences for you to understand that your analysis to some extent is correct. So we have this liquidity level that the market will likely come to, tap here before continuing in buy. And again, let's use the Fibonacci. Let's see what the level is going to look like. For the Fibonacci, let's take our measurement from here. Good and fine. As you can see, perfectly, we are just around the 50% level. I haven't even checked this before. So we're just around the 50% level. So there's high chances that the market will push down to the 50% level before the buy is going to continue. Remember, we are in a weekly time frame. So this level is going to be acting as a strong level for the market to buy from. But let's see how true this could be. So we'll go to the other smaller time frame, which is daily time frame. Let me remove this. Go to the daily time frame. Let's look at what we have just around here. Now, from the daily time frame, as you can see, the market created a resistance before. This was on Monday, 12th of January 2026. Then on Tuesday, the market created a bearish candle that formed a very nice resistance level. So let's mark that out. This level should be at the top of the bullish candle, not the bearish candle. For those of you that don't understand what I'm doing, you could write me a direct message so I could explain that to you. So we'll try and fix that line. Okay, it's like the bullish and the bearish candle are the same thing, but it's okay. So we're going to fix the line. Yeah. So we got it now. So we had a resistance here that the market just broke through. It couldn't resist the market. The market just broke through it. And what happened next? As you can see, the market came back to retest that level. Now that level now is now acting as a support. This was the same thing I was trying to show you guys in the weekly time frame. So the market now came back That level acted as a support and pushed the market. You see, it supported the market upward. But finally, yesterday, Friday, the market broke out from this level. Because for those people I made analysis for before, I told them that once we can get a break below, because it's like the market was ranging here in a smaller time frame, it was ranging here. So I told them once we can have a break below, on a retest of this line, we should continue the selling. So we're going to extend this line backward. So we have this line here. And as you can see, the market has already broken past the line. So which means on a retest of this line, we're going to keep selling. Let me remove this. So we're going to keep selling at least to this level here because there's a level here the market has not touched. So we have this level here. We have this level. Other level to target. So on gold, we have that level to target. Once you start selling from Monday, your first target is going to be this level. Then we have other levels here to target. We have this level here to target as well. Before we come to this level, because we are coming around here. We're coming just around here. So gold is going to sell for a pretty long time. As you can see, all this analysis, they're coming from the higher time frame they're coming from the higher time frame. So I could change, I think I have to go back so I can change the line, the colors of the line, so we know what we are doing. Color 1 week. Okay. So this is going to be the 1 week. Okay, level. Then this was the monthly level we marked then. So back to the daily time frame. So we have these two levels of targets. We have these two levels of targets. But first of all, we're going to target this level. So now let's go to the 4-hour time frame to see what's happening there. So from the 4-hour time frame, we can see that the market has already broken. We have a change in state of delivery here. As you can see, we have bullish, rejection, 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 bullish. Finally, the market just dropped. You can see a very massive sell to this level. But good enough, it did not touch this level. So we still have hope to trade back to this level. But I made this analysis, and a lot of people took the trade. Of course, they sold to this level. So we've broken out from this range because it was like a range before. It was that. Yeah, it was like a range before. And I said then that if the market breaks above, that bullishness is going to continue. But if for any reason it's going to break below, on a retest of the range, we're going to continue selling. And this is what played out. You can see the market actually broke out from below. It went bearish. So now it has come back now to retest this level. So from this level now, we're going to look for our trade. a sell trade. But quickly, it's important you look at those areas that you have around you because this candle eye now will be serving as liquidity for us to take our trade. So on Monday, when the market opens, of course, the market is going to go maybe go below before goes up. So we have this level as our liquidity first that the market needs to take. Then let's look at those levels that are very close to this inducement level. We have an OC level here. We have an OC level here. Again, we have this level that has acted as a support in the past. If you look at it, the market rejected from there. One, twice, third time, fourth time, the market rejected from there. So it acted as a support nicely. Finally, the market broke through. Then it came back again. Now acted as a resistance once, twice, before the market actually broke through. Then this one finally came and broke through. So now we can see that this level has been a very strong level. So if it has been a very strong level, it should be a level of concern to us, as you can see. So we just mark all the possible levels that are very close. So we have this level. Then, of course, we have a key level here. But why I'm seeing that the market may not come here is still enough. We still have a reason why we should mark it because that level swept the market, swept the eye of the previous candle. So now we have a sweep and a break. The first pullback is acting as our inducement. So once the market takes this level, tap into a key level here, we'll think of to sell. We say we have this level that is very close to this inducement. So we have this OC level there. But again, I'm not considering this that much, but a little bit far away. So we have these that are very close. 1, 2, that are very close. But this is just the 4-hour time frame. So we can go to the 1-hour time frame to see other smaller key levels that we may want to trade from. Now, going to the 1-hour time frame, as you can see, this was that high. I don't want many lines. I don't want too much lines on my chart. But just for you to understand what we are doing. Okay, so we have this one that's acting as that inducement then. So we're expecting that this market we're going to push above this, sweep this. So once the inducement has been taken, anywhere around there, this market will sell from. So let's look at the closest level we have. We have that this bearish candle has already swept has already taken the liquidity from this candle and it has broken. So our best trade is going to be from this OCL level here between these two consecutive bullish candle. So we're going to have our trade somewhere around here. Let me just use this at the OCL level. Let us just mark this line as well to include it. From the OCL level here, let's put it there. Good. So this will be our expectation for SAUUSD. So we need the market now to push back into this level, then reject because it's going to reject from this line. This line is still our focus. So we're just going to have something of this nature. Taps into it, rejects. On the retest, we keep selling. So our first target is going to be this low here. That's going to be our first target. So we're going to have this. Taking our trade is going to be from around here, anywhere around this area here. Put our stop loss Then our take profit is going to be, so you can take your first take profit here. You can do your first take profit at this level here, while we have other levels under to target. These are the main levels. So this stop loss is too tight. So you can put the stop loss, you can increase it a little. Please, you can use confirmation entry here because we still have a zone upward. So no need to take direct entry. Use confirmation entry. Once you have the confirmation, you take your trade. Unless you just want to push your stop loss to this level, then you can take confirmation, you can take direct entry. Once the market gets to this level, just take your trade. But then your RRR will be reduced. So confirmation entry is going to be the best for you. So you could keep some nice RR for yourself. So this is the analysis for SAUSD. Coming next week,